Stock market analysis and projections on the S&P 500. First, this important information. Just look over this slide. You'll get an idea of our analytical information, how we approach the markets, and of course, a little disclaimer in here. So please take a moment to read this. Stop the video. Stock market, S&P 500, short-term view, a fake bounce and more trouble. That is what I believe, as I show you this multiple time frame analysis and give you this a lesson on cycle analysis. So let's take a look here as we look at the S&P 500. So this is SPX, and for those of you that are brand new and are not familiar with the analysis that we bring, we do cycle analysis. And on the bottom are cycle brackets. They are simply a tool, a drawing tool that helps us see the energetics in the market. And cycles are measured from trough to trough. And you can see there are cycle periods in here in multiple time frames. In this case, the dominant cycle, as we see it right over here, made a low here. That's that cycle line right there that you see, and made a low here. That's the cycle line, and made a low right here. And you can see the beautiful rhythms in here in the market. What I really want to focus on is the minor cycle and the great messaging in the minor cycle. You can see in here where the minor cycle bottomed right here. And then, because this was way above where this started, this cycle, it said that the next minor cycle was likely to be driven up by this upward momentum and make a higher high, and it did. These yellow areas are the periods of risk, and when they occur late here, there's not a lot of time for them to decline. When the peak is earlier in the cycle, and you could see the minor cycle right over here, that almost broke down, that's the negative messaging right there, the failure at the peak, and then breaking under here and declining for another week and a half. That set up what was looking like a fairly negative situation, but then the minor cycle right in there formed a bullish pattern again. You can see that the configuration gave you a higher bottom right there, and that said that the next rally was likely to continue up. Now you'll see our slim ribbon turn positive right over here, our slim ribbon PO on the bottom. These are this is a level 4 special indicator study that we have, and you can see these positive resumption signals that you got right in there, and that was telling you the market was still strong. And note the period of risk right in here was short in duration also. Then something very significantly changed, and that is when this next rally came right in here, it failed very quickly. This was supposed to come up here and test this high or get higher. We had a higher projection as a possibility up over here, but then when it got under this low at 40.6079, which we warned about, we said this is a very negative condition. It is suggesting that the intermediate longer term patterns are pushing to the downside, and we came up with our bearish scenario. So here is that minor cycle right in here that you can see, and that is in a negative configuration, what we call a left-hand translation, where it peaked way on the left side of the cycle. And what that says is this next minor cycle right in here is likely to also give you a negative formation. Yes, we have had these minor resistance sell zones here on our charts, saying that we thought when the bounce came in the minor cycle, that would get you up to those levels, and then it would fail and begin to come down again. So the next period of risk, which coincides with the weekly chart and that period of risk that we've been discussing, is right in this time frame right over here. So I'm just going to bring that yellow period right in there. That is the really significantly negative period. It says that when this rally is over with, and it might be a number of days still in here as it gets up into this minor resistance sell zone, that then when it fails, it's very likely to get under this level, and this is that area that we talked about of capitulation. The best case that we can make is testing this low over here after this rally's over with. That is a low probability. A higher probability is this black line, which points right down over here to about 3840 in the S&P 500. So this then gets to begin into our 300 to 600 point target we've had on the downside. This is even a good possibility, 37.55 right down over there. We had originally talked about testing the major lows down around 3,500, but you could see we don't even have a projection in there because the time is running short on the intermediate patterns, and the likelihood of that has really been reduced. On top of that, the longer term patterns, especially the monthly, are giving indications that the bear market really ended in October. And this is a very positive overall shape that's being formed in here in the intermediate patterns. That says to me that there is likely a capitulation coming in here, but right now we're looking for worst case of around 37.55 with a likely move down to about 38.40. That will be our targets right in here. And this rally right over here is very doomed to fail. And this minor cycle messaging that we see in here is really telling us that. You can see positive here, negative here, and the probability of this second half of this dominant cycle in here bringing a hard sell in this period, which basically points to somewhere around the second week of March here into the third to fourth week of March here, with a possibility, you see this is out into late March or maybe even early April before this bottom comes, because when you get into hard sell periods, they tend to last a little bit longer. So we're allowing for the fact that this could run a little bit long, but in this bounce in here may only last a few days, and then we get into a period where it's very likely to get sold very hard again. After this period is over with, we get into the next rally stage out over here. And that's why I said early in the show that investors, well, this could be their best time or worst time for 2023 as we get into a period where the market is likely to get sold very hard. That will hurt some people, and that will help some that have kept their powder dry, as we have suggested, waiting for a better opportunity where we thought was going to be mid to late March or maybe in early April. That is a look at the short-term view of the S&P 500. I hope you found that incredibly illuminating. Okay, so that's it for what we're going to show you. Please do make sure that you become a level 4 member. We've extended out one more week that you'll be grandfathered in to have the market condition monitor if you are a level 4 member by March 12th. And you'll get everything that's on here. Please go to the top of the askSlim.com website, click the Learn More button, and you'll be able to see everything that's included in this and really get a good sense for the market condition monitor. Become a level 4 member in the next week, and you will have the market condition monitor at no additional cost.